Hello, good evening everyone. So myself K. Tirumala Reddy. So I will be uploading some accounting related concepts in my YouTube channel. So in this video, I will be discussing one important concept from the accounting standard AS16. So before we go deep into that particular concept which I am gonna teach you now, so let us first know about what is borrowing cost, definition of borrowing cost. So what will come under the definition of borrowing cost, and then out of that I'll be explaining one important concept. So where we will be discussing about some foreign currency borrowing. So generally foreign currency borrowing may be regarded as AS11 foreign currency fluctuations, or it can be given treatment as per AS16 borrowing cost. Okay. So what part will be regarded as AS11? What part will be regarded as AS16? That I am going to give clarity in this particular video. Okay. So before we discuss about that concept, let us understand the basic definition of borrowing cost from 5 to 10 minutes, and then we'll jump to the core part. Okay. So put the heading everyone. AS16 borrowing cost. So first understand guys, generally borrowing cost refers to that cost what I am incurring in relation to borrowing. That means there is something called borrowing. So every company may borrow funds through bank loan or through debt or through bonds, etc. Now all these are borrowing costs, all these are borrowings. So I'm not talking about borrowing in this accounting standard. I'm talking about borrowing cost. So what would be the cost that a company might incur when it is going for borrowing? So obviously on this bank loan or debt or bonds, have to pay something called interest. Have to pay something called interest. So in simple terms, borrowing cost implies interest. But the chapter name is not interest, no. So when the chapter name is interest, we would be discussing purely from interest point of view. But here is not using the word interest, he is using the word borrowing cost. That means interest is one of the component of borrowing cost. So along with interest, there are few more points form part of borrowing cost. We'll discuss one by one. Now first one is, as we all know, interest is one part of borrowing cost. Now second one, what other cost that a company might incur in relation to borrowing? Understand, Anna? You know something called as debentures. So company issues debentures. When a company issues debenture, it can issue at par, at a premium, at discount. So understand from layman point of view first. When I'm saying at par, 100 rupee ka debenture I am giving for 100 rupees. So no profit, no gain there. If I'm issuing at the premium, 100 rupees wala I am giving for 120 or 130 or 140 as the case may be. Now when I am giving it for more than that base price, more than face value, that extra amount is like income to me. But my chapter name is cost. So exclude premium wala concept also. Now when I issue debentures at discount, so 100 rupees wala debenture I am giving for 90 manlo or 92, 93. So 100 rupees face value I am giving for 93. There is some 7 rupees extra cost to me or 7 rupees loss to me. Is a cost? Yes. That can also be called as borrowing cost. So one point is interest. Second point is discount on issue of debentures. Third point is, now at the time of issue it is okay. Sometimes the companies may incur some extra cost at the time of redemption. So I hope everyone is aware of the word called redemption. So for others, redemption in the sense I am taking back my debentures. So few years back, I issued some debentures to the public. I have taken the money. I gave them debenture certificates. Now I am taking back those certificates and I am returning back their money. That is called as redemption. So generally, again, same logic. I can do redemption at par, at the premium, at discount. So at a par means I am paying exact face value. At a premium means I am paying more than face value. Now earlier, I am calling discount as my cost because I am getting something at lower than the face value. Now I am repaying. To be called as cost, I have to repay more than something what it is worth of. So my face value is 100. I mean debenture face value is 100 and then I am paying more than 100. that is at a premium. The extra amount is again cost to the company. Yeah, that cost also can be called as a borrowing cost. So interest and then discount on issue. This is also borrowing cost. And then premium on redemption of debentures. This is also borrowing cost. And along with this, what happens? Key. So when a company may go for debt or may go for bank loan, Manla, I am going for bank loan. When I go for bank loan, the first question what the banker asks is, so can you please submit your projections? So what is your future of the company going to be? So can you please give me some authenticated balance sheet, authenticated profit and loss account? So based on which I can trust you that you are going to pay my EMI. Those are called as projections in short. So that projections who will prepare? He might prepare, but what is then who is responsible for authentication? So basically, in general, a professional, maybe a CA or a CMA graduate, so he will be preparing that projections. He will do authentication. He will put a signature that he will give to the client. He will give to the bank. That we want to free of cost. I am paying some professional fees. Okay, same thing happens with when raising debentures or bonds also. If you are incurring any professional fees or any expenditure in relation to obtaining of loan, so that can also be called as borrowing cost. As of now, 4 points. First one, interest. Second one, discount on issue of debentures, premium or redemption of debentures, or any other incidental expenditure in relation to borrowing of funds. Last one, very important concept, that is fluctuations in foreign currency loan. Fluctuations in foreign currency loan. Generally, fluctuation in the sense my exchange rate fluctuations. Okay, we'll discuss in detail. Generally, data fluctuations will be regarded as foreign currency fluctuations, and they have to be covered in AS11. That's what we discussed when discussing about AS11. Okay, now I am saying that certain part of that fluctuation will also be called as borrowing cost. Okay, so basically the definition of borrowing cost includes interest, discount on debentures, issue of debentures, premium on redemption, incidental expenditure, and then fluctuations in foreign currency loan. Now in this video, I am focusing on these fluctuations. Okay, there is one important problem in our material, maybe ICA or CMA material, where he talks about a foreign currency loan, and he will ask us to decide. So what part of that fluctuation will be called as A16? What part would belong to AS11 karke? Okay, so in this video, I'll be trying to solve that problem, and I'll try to give some clarity regarding that AS11 and AS16 ka breakup. Okay, so before we go into the topic, so let me show you a problem with which I'm going to give some clarity regarding that particular concept. Okay, so this problem is from ICA material Nana. Okay, so see the question first. So from this question, we will discuss the concept as well. XYZ has taken a loan of USD 10,000. And first understand, the company name is XYZ Limited. So can I say that company is in India? So my home currency is rupees. So except rupees, any other currency will be called as a foreign currency. So now I have taken a loan of 10,000 USD on 1st April 2021. So what is the loan amount? 10,000. What is the loan currency? $10,000. USD means United States dollars. So I have taken a loan in other than rupee, so called as foreign currency loan. Till now it's okay. For a specific project at an interest rate of 5% per annum payable annually. So my loan amount is $10,000. My interest rate is 5% per annum in terms of dollars. Now, on April 1, 2021, the day on which I have taken the loan, the exchange rate between the currency was 45 rupees per US dollar. That means $1 is equal to 45 rupees as on 1st April 2021. Now understand, will the exchange rate be constant throughout the day, throughout the year? No, every minute, every hour, it keeps on changing. Now this 45 on 1st April it is same. Now maybe after 1 day, after 2 days, or at the end of the year, this 45 may become either 44, it can become 70, it can become 80. Those are called as exchange rate fluctuations. Okay, we'll discuss. Now, the exchange rate as on 31st March 2022, I have taken loan on 1st April 2021, and he is talking about another exchange rate on 31st March 2022. That is after 1 year from the date of loan. What is the rate of exchange on that rate? 48 rupees per US dollar. So initially on the date of loan, exchange rate was 45. Today at the end of the year, understand, at the end of the year I have to pay interest also. So when I am paying my interest, my exchange rate is 48 rupees per US dollar. The corresponding amount could have been borrowed by XYZ Limited in local currency, means Indian rupees, at an interest rate of 11% per annum as on April 1, 2021. So I have taken loan on 1st April, no, an amount equal to 10,000 US dollars. So he is saying that you are getting loan at 5% because you borrowed in US dollar. Okay, maybe US bank, Citibank, USA. Now he is saying that if you want to borrow funds in local currency, in Indian rupees, you would have paid interest of 11% per annum. So this is the question. So from this, now understand, Nanna, at the beginning of the year, my exchange rate was 45 rupees per US dollar. End of the year, it is 48 rupees per US dollar. Now, initially, my loan amount is 10,000. So I will be valuing my loan at that particular rate. So my loan amount would have been 10,000 into 45, some 4,50,000 in my books of accounts. Now, at the end of the year, when the rate changed to 48, my liability, that is bank loan, should also be valued at the closing rate. Okay, so we'll discuss this in detail in accounting standard 11. Okay, for the time being, understand, any asset or any liability at the end of the year, when you're disclosing them in the balance sheet, they have to be shown at the closing rate if there is any foreign currency asset or foreign currency liability. This much remember, Nana. There are some extra points here and there that you will get some clarity in AS 11. Okay. Now, so initially 45, now 48. The exchange rate got increased by 3 rupees per dollar. My loan amount is 10,000. That means the amount of loan will increase now. When the amount of loan is increasing, what part of loan should be given treatment as per AS 11? What part of loan should be given treatment as per AS 16? That is the concept here. Okay, now understand. See this concept, everyone. See how I am solving. Okay, here. So, what is date of loan? So, date of loan is equal to 1/4/2021. So, my year closes on 31st March 2022. Now, I have taken loan in US dollar and my loan amount is 10,000. Okay, $10,000. Initially, when I took the loan, I would have valued this loan. I would have passed the entry in my books of accounts, cash account debit to bank loan account karke. Okay, at 10,000 into 45, that is 4,50,000. To take loan in foreign country, you come back to India and you will be getting 4,50,000 rupees. This is the concept. Now, on 31st March 2022, when I am preparing my balance sheet at the end of the year, what is the rate? 48. Now I have to show my loan amount also at 48 only. So I have to show it. So $10,000 into 48. It comes to around 4,80,000 Indian rupees. Indian rupees. Now the question is, sir, initially it was 450. Now it became 480. It's a liability. When liability gets increased, it's a loss to me. Now that loss can also be called as, I'm not saying it will be called as, I'm saying it can also be called as borrowing cost. Now, what's the total loss amount? 30,000. Now, will 30,000 be called as borrowing cost? No, the entire 30,000 is not called as borrowing cost. Out of this, some part we'll call it as foreign currency fluctuations and give treatment as per AS 11. Some part we will call it as a borrowing cost as per AS 16, give treatment as per AS 16. So AS 16. So before we come into this 30,000 ka breakup, let's concentrate on one more point. The principal amount, okay. Now when I reached 31st March 2022, don't you think I have to pay interest to bank? Obviously I have to pay. So in which currency I will pay? Array, I have taken loan in US dollar. I have to pay interest also in US dollar. How much interest I have to pay? My percentage. So my loan amount is $10,000 into 5%. I think it comes to around $500. 1% is 100, so it should be $500. Now it is dollar in terms of dollars. Same thing, I have to convert it into Indian rupees. Now understand, Nanna. Initially I told you all liabilities, all assets on the date of balance sheet should be shown at closing rate. Now this being an expenditure, any income, any expenditure, generally we translate them using average rate or rate on the date of transaction. So generally interest we will pay at the end of the year. So at the end of the year my exchange rate is 48. So 48 into 500. If it is 1,000, it should be 48,000. So half of that it should be 24,000 Indian rupees. Now this 24,000, no doubt it is interest only. It is called as borrowing cost only. So no headache with this 24,000. My headache is with this 30,000. Okay. 24 is borrowing cost. We'll give treatment as per AS 16. Now coming to this 30,000. So how are we going to do the breakup? Very easy. Just understand. We have taken foreign currency loan. Now, what would have been your interest had you taken loan in Indian rupees? It told in the question that if you want to borrow in local currency, you can borrow at 11%. What rate? 11%. So we'll calculate what would have been the interest had I taken the loan in terms of Indian currency, in terms of local currency. And what is the total loan he has taken? 10,000 into 45. That means the loan amount came to 4,50,000 rupees. Now, if we take $10,000 loan in US, it is equal to taking off $4,50,000 in Indian rupees. We are assuming that in India also I am taking a similar loan of 4,50,000 rupees. If I have taken loan in Indian rupees, I would be paying interest at the rate of 11%. How much? 11%. So 4,50,000 into 11% comes to 10% comes to 45,000 and another 1% comes to 4,500. So total comes to 49,500. Okay. Just cross check once in the calculation part. Yeah, 49,500. Okay. So now if without taking loan in foreign currency, had I taken loan in Indian currency, I would have ended up paying interest of 49,500. But what is the interest we actually paid by taking loan in US dollars? I think we got interest of 24,000. 24,000. You have taken loan in foreign currency, you paid interest of 24,000. No, don't get confused. This 24,000 is borrowing cost only. Now I am doing all this kahani just to do the breakup of this 30,000, that foreign currency fluctuation in principal amount. What would be AS 11? What would be AS 16? Now, had I taken loan in Indian rupees, it would have been 49,500. By taking loan in US dollar, I am paying only 24,000. That means, can I simply say, by taking loan US dollars, I saved an amount of 25,500. Correct? It should have been 49,500, but you paid only 24,000. That means due to foreign currency loan, you saved in total 25,500. Now, how much amount you saved by taking a foreign currency loan? Now, that much part in this 30,000 would be called as borrowing cost. That means out of 30,000, the total amount of interest saved is 25,500. So out of this 30,000, 25,500 would be called as borrowing cost, and the balance amount of 4,500 would be called as foreign currency fluctuations due treatment as per AS 11. So out of this 30,000, 4,500 qualifies under AS 11 and 25,500 qualifies under AS 16. This part is called as borrowing cost. Now understand, the question may ask you, what is the total amount of borrowing cost? The total amount of borrowing cost is not 25,500. This one more actual interest what you have paid to foreign bank. No, that is 24,000. This 24,000 plus out of 30,000, this 25,500, both mila ke I am getting 49,500. So total borrowing cost in this question should be 49,500, and total amount which would be regarded as foreign currency fluctuation as per AS 11 would be 4,500. Okay. Now the common dot which comes to every student. Okay. Now understand, Nana. Here the total fluctuation amount is 30,000. Okay. And what you are doing out of this, I am doing calculation of saving. By taking a foreign currency loan, how much amount exactly I saved? If the amount exactly I saved is less than 30,000, no headache. So amount saved is मान लो 20,000. So 20,000 will be called as AS16 borrowing cost. Balance 10,000 will be called as AS11 का foreign currency fluctuation. Now for suppose out of this 30,000, the actual amount of savings that you are getting due to foreign currency loan is more than 30,000. मान लो 35,000. In that case, what we do? Okay, if it is more than this, the total amount of 30,000 will be called as AS16, and there won't be any part that belongs to AS11. So simply speaking, in short, can I simply say, out of this foreign currency fluctuations, borrowing cost will be foreign currency fluctuation or interest saved by taking a foreign currency loan. That means that little less interest what you paid by opting a foreign currency loan instead of a local currency loan, whichever is lower, will be called as borrowing cost. So this amount or that saving, whichever is lower, will be called as borrowing cost. Baki amount will call it as AS11 foreign currency fluctuations. I hope this is clear, Nana. So once get back to the solution from the material. See what is saying. Interest for the period I am paying 24,000. Simple. Loan amount $10,000 into 5% comes to 24,000 by multiplying with the rate on 31st March. Okay. And what is increase in liability? Simple, we can do 10,000 principal amount. It changes from 45 to 48. So 3 rupees difference. So 3 rupees into 10,000 total 30,000. Now out of this 30,000, we need to do the breakup. How much AS11? How much AS16? Interest that would have resulted if the loan was taken in Indian currency 49,500, foreign currency 24,000, savings 25,500. So 25,500 is called as borrowing cost. Baki we call it as AS11. See, therefore, out of 30,000, increase in the liability towards principal amount, only 25,500 will be considered as the borrowing cost. Thus, total borrowing cost would be 49,500, being aggregate of normal interest 24,000 and foreign currency fluctuation to the extent of 25,500. What about the balance? The balance would be given treatment as per AS11, that is 4,500. Okay. And now, if you are clear with the concept, just change the interest rate of local currency from 11% to 13% and give a try, everyone. So once you are comfortable, that you will be able to do. So hope this concept is clear to everyone. I don't request you to subscribe to our videos, but after listening to the content, if you feel like man can make accounting very easy and interesting, then only you please subscribe to my YouTube channel. Please share with your friends. Okay. So thank you very much. We'll be back soon with another interesting accounting concept in a simple way. So let's take a place that we are going to make accounts very easy. So have a great day, guys. Thank you. Bye bye.